Hello, everyone, and welcome. I'm Alicia Rabel. I am the proud CEO of AT&C Revenue Services. So I am so glad that you're here for our very first session in this new educational series. We'll be hosting these regularly to help ASC leaders strengthen their revenue cycle management strategies. And today, we're diving into a topic that matters to every center, understanding your year-end revenue numbers and what they reveal about your business health. So let's start by grounding ourselves in the purpose of this session and why we are here today. So I want to set the tone for our time together. This isn't about selling. It's not about pitching anything. Okay. It's about paying it forward, sharing insights that we've learned over the years supporting surgery centers nationwide. AT&C's mission has always been to elevate the ASC community by empowering leaders with knowledge. And the end of the year is really when your numbers tell you the full story. What worked, right? What didn't work, and where to focus next. So now that we've set the intention, let's talk about why year-end metrics matter more than any other time of the year. December gives us the clearest, most honest picture of revenue health all year. By this point, your volume stabilized, payer behavior has played out, and any small inefficiencies that existed earlier in the year are now fully visible in the numbers, right? Your data isn't just telling you how much money came in the door, it's telling a deeper story about your processes, your staffing, your communication flow. Delays, denials, growing AR, or inconsistent cash flow usually aren't random, right? They're signals. And this applies regardless of how your revenue cycle is structured. Whether your RCM is managed in-house, whether you're supported by a partner, or you're fully outsourced, the metrics don't lie. They reflect how effective your teams are, your vendor is performing, and truly performing behind the scenes, right? The purpose of reviewing these numbers is not judgment, it's awareness. Awareness gives you control, and control allows you to make informed, strategic decisions instead of reactive ones. So at the end of the day, you can't improve what you don't measure, right? And December is the moment when the measurements are the most reliable. With that foundation in place, I want to walk through the revenue cycle step by step, starting at the very beginning with your front end metrics. The front end is where success either begins or where cracks quietly start forming. Okay, so first you'll want to look at charge lag. A healthy target is 2 days from data service to claim submission. Every extra day here is a day your cash is sitting on the table instead of in the bank. Okay, the next thing you're going to want to do is track denials tied to registration or eligibility errors. These are some of the most preventable issues in the entire revenue cycle. And when they show up, they usually point to process gaps, not payer behavior. And then the last thing you really want to review is coding and case mix. Are your codes truly reflecting the complexity of the cases being performed? Undercoding doesn't always raise alarms, right? But it does quietly erode revenue over time. And when the front end is strong, everything downstream moves faster, it moves cleaner, and with far less friction. So once the front end is solid, the real work happens in the middle of the cycle. So let's look at where most ASCs start to lose that traction. This is where the real pulse of your revenue cycle lives. It's not the dramatic errors that cause the biggest revenue loss. It's the quiet, repeated inefficiencies that go unnoticed. Let's talk about benchmarks for a second because they do vary depending on your model. For AR days, fully in-network centers should be turning over claims in under 35 days. Hybrid centers with both contracted and out-of-network cases have a little bit more complexity, right? So under 45 days is still healthy. And then out-of-network centers, because reimbursement and appeals take longer, should aim for under 60 days. When looking at the percent of AR over 90 days, for in-network centers, keep it below 15%. Hybrid centers under 20%, and out-of-network under 25%. If you notice them climbing higher, it's usually a signal that follow-up is lagging or that denials just aren't being worked quickly enough. The last thing you'll want to do, and that I want to go over, is net collection rate, which is one of the clearest indicators of financial performance. In-network centers should collect at least 95% of what's contractually owed. Hybrid models should target 90% or better. If you are an out-of-network center, reimbursement is often more unpredictable, right? But you should still aim for about 85% or higher. These aren't just numbers, okay? They're thresholds that tell you whether your systems and your people are working efficiently. If you're consistently above these targets, then great, right? You're in control. But if you're not, that's an opportunity to dig into the why. Why are you not meeting these metrics? The good news, of course, is that these are all fixable, right? With the visibility, with accountability, with consistency, most ASCs can improve these metrics within just one single quarter. So after the mid-cycle, the story continues in the back end, where patterns become crystal clear. Once claims are paid, it's tempting to just move on, right? But the back end of the revenue cycle often reveals your biggest opportunities for improvement. Start by reviewing your write-offs. Were they truly contractual write-offs, or were they preventable losses tied to process issues, follow-up gaps, right? Or missed appeals? You'll also want to monitor your credit balances. A growing number of credits can signal over collections, delayed refunds, or possibly even breakdowns in communication between your teams. Left unaddressed, they can create both financial and compliance risks. The last thing you'll want to look at is bad debt trends over time, right? Compare this year to prior years, right? Are your efforts improving outcomes, or are balances aging out faster than they were before? Closing the loop ensures that your revenue cycle truly completes, or are you just ending it with a write-off? It's where accuracy, accountability, and sustainability actually come together. Metrics alone don't create change. Okay, so let's talk about how to turn these numbers into actionable improvements. Numbers don't fix themselves, but they do tell you exactly where to focus. The first step is to review the data honestly, and then identify the patterns. Where are the leaks? Is one payer driving a disproportionate share of denials? Are AR days climbing because of follow-up gaps, authorization issues, or front-end breakdowns? From there, you act with intention. Instead of trying to fix everything at once, just choose 2 or 3 metrics to focus on in quarter one. These should be areas where small changes can drive meaningful results. And then finally, you improve through consistency. When you stay focused and you stay accountable, those incremental gains compound over time. By next December, what felt like minor adjustments will actually show up as major wins in cash flow, in efficiency, and even in your team's confidence. As we look at these opportunities, it's helpful to understand how support can vary across different ASC models. So at AT&C, we meet centers where they are. For in-house teams, we provide benchmarking and process consulting. For hybrid setups, we help define roles and ensure clear ownership. For outsourced centers, we provide an independent review of performance. Our role is clarity, okay, not control. We want every ASC to succeed, whether we manage your RCM or not. I want you to be successful. And I am on a mission to give back to this ASC community that has given me so much over the last 30 years. So if you have a question or you have a concern about your revenue cycle, please reach out. I am here to help you. It doesn't require a contract. Okay. I want to be a resource for you. So if you are unclear on what metrics to look at, please reach out and I can help you define that. So let's bring everything together and focus on the key takeaway as you head into the new year. As you wrap up the year, take time to truly review and reflect. Don't just look at the numbers. Look for the story that they tell. The health of your revenue cycle is the health of your surgery center. Strong 2026 results start with insights that you gather right now at year end. And to wrap up today's session, let's talk about your next steps and what's coming in the month of January. So as we close, I'd love for you to think, what's your biggest concern right now? Is it AR days? Is it denials? Is it collections? Is it the new rulings about authorizations from Medicare? If you would like, you can drop it in the chat or please DM me, send me an email, send me a private message because I would love to help you solve your biggest concern. As a thank you, we have created a year-end revenue health checklist. This is a very simple one-page guide to help your team assess these metrics and really design a plan for quarter one. If you'd like a copy, just share your email or email me directly and I'll pass that along. If you are joining us live today, you will receive this immediately after the call. And in January, like I said, this is an educational series. We are going to discuss how to build a very simple but powerful RCM scorecard that gives you true visibility. It drives accountability and it sets your ASC up for a strong 2026. So I really want to thank you again for being here today. I hope these insights support you, empower you, and empower your team as you close out the year with full confidence. So I'm going to open it up for any questions or comments at this time. Let me reach over to Alicia. Are there any questions, Alicia?
Alicia, we currently do not have any questions. To all our attendees, if you do have a question that you would like to ask directly to Alicia, feel free to raise your hand and we can unmute your microphone or drop it in the chat. Looks like we do have a question from Don. Alicia, what's your position on involving AI under RCM?
Yes, good question, Dawn. So we constantly are evolving, right? We have several projects going on AI. We've dipped our toes into coding, using AI as that source, as well as a helpline service. As you know, my mission is to give back and to be a good resource, right, for our communities, whether you're in-house or hybrid or fully outsourced. And so we've been really working hard on an AI model for a helpline. So there's several ways we've introduced AI into our business. Yes, and I see a question from Tracy. Tracy, you are so welcome. You know, I have known you for many years, and my mission is to educate and give back. So if you have clients or you have centers that you oversee, you do not have to be contracted with AT&C. If you have a question, please reach out. We are here as a resource for you. All right. Well, I will end this webinar until the next time. Keep leading with clarity, keep leading with purpose, and we will see you in January. Thank you so much, everyone.